Today's guest on Uncontested Investing is Alex Glickman from Gallagher, a leading insurance firm within the real estate investment space. With over 40 years in the industry, her experience and expertise stacks up with the best the industry has to offer. As a leader at Gallagher, her work in the insurance industry has helped people across the country when they have needed it most. She takes a potentially boring topic and morphs it into a powerful conversation. She makes an impact on a global level, and her insights are irreplaceable. Let's get the episode started with Alex Glickman. Welcome back to our Uncontested Investing studio. I'm your host, Nate Zielinski, joined by my co-host, Suzanne Andreessen. And today our guest is Alex Glickman, Global Leader of Real Estate and Hospitality for Gallagher. Alex, thank you so much for joining us
Thank
today.
you, Nate. Thank you, Suzanne. Pleasure to be here.
Glad to have you.
So where we start with every guest is, can we take it back to your start in the industry? What appealed you about the real estate space? More importantly, the insurance side of things, where you've carved out a great niche and a great career.
Well, it's a long story, but I'll consolidate it very quickly. I am in this business because my best friend got into Harvard Law School and I did not. And I was so competitive with her, I thought I just can't possibly go to someplace that wasn't Harvard. So in all honesty, I started after I graduated from college in 81. I taught for a little bit and got into the catastrophic loss restoration business, of all the weird things. But my clients and my prospects were insurance brokers. And I realized how much I was fascinated by it because you got to see the gestalt of an organization. So that's where it started almost 42 years ago.
Wow, that's a great dedication to the space. So on that note, what accomplishments or initiatives are you most proud of at your time at Gallagher?
Well, you can be an overnight success after 42 years. I can point that out. What I try to learn every day, and when I started in this business, it was very, it was a very old, stodgy business. And what has been fascinating, and we'll talk about it later, about technology, about AI, how things have evolved. But my greatest accomplishment, I think, since I've come to Gallagher, I started Marsh's real estate and hospitality practice in 97, but I came to Gallagher in 2001. And it's seeing the evolution and seeing the growth of a practice from something that was very small scale to now a multi-billion-dollar platform.
Sure.
So, I mean, just talking to you for a few minutes, I can see that this just isn't a job for you. It's a passion for sure. So you've been at the forefront of a lot of different insurance products at Gallagher. What drives you to create these products that investors rely so heavily on?
It really comes down to the need. So much about real estate is what their investors want, what their lenders want, what their stakeholders need. So if you understand finance, which I would like to say I do, you can tailor products and you can tailor the solutions. So people are talking more and more about captive insurance companies, which, by the way, is not free insurance. I'd like to underscore that. But we look at what can we do to protect our clients, but also give them the optionality, because insurance is a commodity market. So some years it's very expensive, other years it drops like a hot rock. Mm-hmm. So it's neat.
So how have some of the recent storms and fires affected the investor strategy and the portfolios and how they should move forward with that?
That is a great question. So insurance is not monolithic. Most insurance companies, with the exception of just a handful, rely on reinsurance because they have to protect their balance sheet. So the reinsurers, I'm from California, from Southern California. So the horrific wipeout in the Eaton and the Palisades fire, that had a direct impact on the likes of the State Farms and the Farmers and Chubb and a few others. And the reinsurers who backstop the personal lines, not so much on the commercial side, but there is only a finite pool of capacity. So it will have, I believe, an effect, but it may not be an immediate turn. So commercial owners are in better shape, to be perfectly honest, than personal lines customers.
So have you seen certain geographies alter their appetite for certain markets?
100%. So particularly in Florida, Tier 1 wind, we're seeing it in the Gulf Coast, we're seeing it in California, Wildfire is huge. We're also seeing better underwriting. And by what I mean by better, the insurance companies are now looking at, they believe in science. There is global warming. There are changes. So you see the terrible storms that hit Kentucky, the tornadoes, the flooding. You have to put all that into the calculus to calculate what should be a fair and appropriate rate.
Well, you're even seeing, just regular real estate transactions through the MLS, and real estate agents are now required to do a flood, review on every asset.
Every asset.
Not just the waterfront asset, every asset.
Well, because so much of what has been flooded was not in a flood zone A, A or V. They were just, runoff of rains. Hurricane Harvey was a great example.
Sure.
So that's why I think it's very prudent for people to say, if I have any exposure to runoff, if I have any exposure to any type of rising water, they should at least buy the National Flood Program.
Now, if I may jump in, I think from an outside perspective, insurance has a little bit, I don't want to call it a bad reputation, but it can be somewhat boring to somebody that's not in the process. I'm saying from the outside perspective. But for you,
No.
personally,
I love it.
we're talking about the fires and Hurricane Harvey and all the tornadoes. So from your perspective, you ever take a moment to stop and think about the gravitation of what you're able to do, positively impact these people after, some of the worst days and weeks of their life?
Yes, because everyone hates insurance. I'm not even sure I like it, to be perfectly honest, at this point in my career. But everybody hates insurance. Do you love paying your auto insurance premium? Of course not. You don't. Who wants that stuff until you really, really need it?
Right.
So what we try to do collectively, my team, and I think more in our industry, but definitely at Gallagher we do this, is understand what the risk profile is of each individual client. Some have greater flexibility because they may not have as landlocked, for want of a better word, their lender requirements. Sometimes they are able to take higher deductibles. Sometimes they're willing to risk more. But if they are highly levered, then the lenders say, nope, we want to make sure everything is really buckled down. So there is a disconnect frequently between what the lender wants and what the client wants to assume. So that's really how we have to look at the loan covenants. We have to look at every aspect of the client and their relationships with their stakeholders to figure out what can we do to give them the greatest protection at the best cost with most optionality.
Yep, very interesting stuff. And I'm sure a lot of your work at Gallagher is creating actual policies and products, but is there a layer of actually educating the client as well? And how integral is that to your work?
We write a lot of white papers. We really try to be students of the industry. And as well as anybody, real estate is not monolithic. So what matters to an SFR owner or manager really doesn't have any impact on someone who's got commercial office or industrial flex or mini warehouses. So digging really deeply is very important. Understanding where their market is going, who their investors are. A PE firm reacts very differently than a REIT because of the duration of their deals and how long they're going to keep an asset, what kind of CapEx they're going to put into it. So yes, we spend a lot of time trying to educate our clients, particularly when it comes to professional liability. And that's directors and officers and errors and omissions. And when economies get shaky, everybody sues.
No.
Shocking, I tell you.
No.
Buckle up.
Alex, I believe since 2001, you've been the head of Global Alliance Real Estate and Hospitality Practice for Gallagher. What did that appointment mean to you, and how do you see it impact from your position?
Leading a global practice requires you not to think geocentrically. And that's been the most interesting part of this. Having partners in other countries and learning how we have clients in Bahrain, in Singapore, in the EU, the UK, South America, all over the place. It is so easy to fall into the trap of, we're Americans, so let's just think like Americans. You can't do that. And it has formed me in a way that I really do try to understand the mores and the cultures of each country and how they look at business, risk, etc. So it's been a great education.
Well, even the acquisition of an asset is terribly different.
Completely.
By country,
Yeah.
versus we have a very, I'll say, a simplistic model, or at least it seems that way to me from this side of the channel.
Right.
But it's, but you look at how other countries acquire assets or what you can purchase or not, so that even the insurance aspect.
Exactly. Yeah, I mean, in the UK, if you have a multi-tenanted building, you give each tenant an insurance an invoice for their share of the insurance. It's really interesting, but you can't think just through the prism of being an American. It just doesn't work.
Sure.
I hate to do this, but we're going to press pause on a great conversation. Alex, thank you so much. This has been great so far. To our investors, stay tuned. This conversation is going to be impactful and very prevalent to everything that's going on, affecting weather not only in the U.S., but across the globe, since that's your position. So, Alex, thank you so much. We'll be right back after this with Deal Breaker, Deal Maker.
REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today.
Welcome back to this week's episode of Uncontested Investing. Suzanne and I are happy to be joined by Alex Glickman of Gallagher. Now, Alex, we're going to put you on the spot for the first time today with our segment. It's called Deal Breaker, Deal Maker.
Okay, put me in, coach.
Yeah, so lock in.
Coach, awesome.
We would love to hear one moment from your career that really served as maybe a launching pad, a turning point, or a light bulb moment, something that's really propelled you to the success that you've experienced throughout your career.
In 2000, I was in a situation at a former employer where a person made an exceedingly horrific racist comment in a room of people. And there was one black man, one woman. I was the woman. There is this black man, and everyone else was not. And this racist comment was such that afterwards, I went up to my colleague, who is African American, and said, "I'm so sorry. I'm not putting up with this." So I had a conversation, and I went up, didn't scream, didn't yell, and said to the person who made the comment, "That was so uncool and so inappropriate." And he basically told me to buzz off. So what happened after that was I was put in the penalty box at my former employer, which starts with the letter M. And I thought, I'm not doing this. I do not fear bullies. So at that moment, my contract was up the next in about 4 or 5 months. And I thought, it's time. And I thought, I'm going to leap. And I wanted a publicly traded company who had a very strong ethical core and backbone. And I reached out to a headhunter, which was kind of interesting because I got a lot of calls. And I thought, I want to talk to these people. And that changed my trajectory forever. And I believe that you don't live in fear.
Thank you. Thank you for sharing that. This industry is better because of people like you. Not only are you professionally proficient, but that ethical and moral compass is what this industry needs.
Well, and ethics is kind of a cornerstone in insurance as well. So I think that's a
It should be. It better be.
Yes, it needs to be. So can you mention a few types of insurance that real estate investors should be aware of when they're building their portfolio?
Sure. You have, obviously, the property insurance, which is, direct damage from fire, earthquakes, wind, etc., and the business interruption. That goes without saying. You have the general liability, some of the slips and falls. You have a construction defect. That goes without saying. Where people miss the putt most frequently is they don't think about the professional liability, which is the directors and officers, the errors and omissions, the employment practices, the cyber, the crime, and they also try to ignore the pollution. So particularly if you're talking about multifamily or SFR, pollution is huge because you end up with lawsuits, and I get loss runs every week. You end up with looking at habitability claims, which tend to tie directly to people who are in arrears. I'm not saying they're legit, but if you don't have the insurance to defend you, this is coming out of your pocket. So I think all too frequently people just stop at the first stop sign. They don't go through the whole insurance neighborhood.
So what is pollution? Is that black mold? What are the elements that you are putting into that classification?
So it's mold, it's airborne, it's waterborne, Legionnaires, listeriosis, all of that. So if you are for example, if you're a multifamily owner, we have this claim. There is a leak of ammonia, and it ended up being a multi-million-dollar claim.
Sure.
So because that's excluded from a liability policy.
Sure.
So you really do need a professional who understands how the policies fit together.
Now, as an investor scales their portfolio, they're bringing on a lot more risk. Obviously, they may be going in between different product types or property types, rather, whether it's a fix and flip, buy and hold, or ground up. How do their insurance needs evolve with that? What products should they be looking at depending on the property type?
If they're in the BTR space and they are actually responsible for the actual buildings themselves, then they need a builder's risk policy. They need to think about the products and completed operations on construction, because most jurisdictions have a 10-year statute of limitations, right? So you fix it, you flip it, and now something happened. There's a collapse of a roof, a collapse of a deck, a collapse, fill in the blank. So I think you can't just say, I'm going to call State Farm and get my insurance from there. You have to really understand the exposures at each different step. And if you are buying in multiple asset classes, wood frame multifamily has a very different insurance rate than a commercial office building, right? Because it's wood and because people live there. The same thing applies geographically. If you are buying assets in Tier 1 in Miami, going to be a completely different profile than buying them in Des Moines, Iowa.
Very interesting.
Yes, it is. So what is the difference then between a landlord policy and a property owner's policy?
Well, a property owner and landlord are interchangeable. I think what you may be asking is, what's the interaction between the landlord and what they're responsible for insuring and what a tenant is responsible for insuring? So if you are a tenant in a building, it doesn't matter what it is. If it's a multifamily or it's SFR, the tenant should be buying their own tenant policy, right? That's called an HO4. I know that's too much information. But if you're a landlord, you want to make sure that you've got coverage for the property, for the general liability, in the event the tenant's insurance fails or isn't there. As I said before, I get loss rents. I can't tell you the number of dog bites, habitability, people going through floors, people tripping and falling. So there has to be that balance.
Sure. Well, and then, how do you, I guess, help educate that and then also turn that into potentially, because I know a lot of the landlords require the tenant insurance policy for their own contents, the content policy. But is there a way for some of these landlords to use this as a revenue stream for their portfolio?
Sure. I mean, depending upon the size and the number of units, definitely. We have some clients who use their own insurance captives and will reinsure that risk. There are tenant indemnity policies or indemnity waiver policies. You can't sell insurance. That's step number one. Insurance is highly regulated by state. There's no federal law. So there are, you can't swing the proverbial dead cat and not find somebody who's willing to offer a tenant insurance policy. There are a ton of them out there. And in most cases, the landlord will get a marketing fee. So depending upon the number of people who sign up, if you have a big enough scale, you may in fact want to write the policy. You may want to reinsure the policy or take the risk. Mm-hmm. So it's not a one-size-fits-all, but it is definitely out there.
Is it part of the RESPA compliance piece and the marketing fee versus?
Well, I don't want to comment on that because there are laws that dictate in every state.
Yeah,
everyone's got their own thing.
Yeah,
So,
very true.
Yeah.
As we bring the conversation back to the broader topic of risk management and insurance needs for portfolios, how can insurance play a role in investors' excuse me, in an investor's risk management strategy? What should they be considering in terms of liability coverage? Well,
liability is what happens to a third party And if they're injured, there's bodily injury, personal injury, right? I slander you, that's the whole thing. Property damage, my tree falls on your car. If you are an owner with swimming pools or SFR where you have, typically 4 to 5 people in a home, you have to look at what the risk profile is. Mm-hmm. Now, if you are a multifamily owner and there is a building that has let's just say a natural gas explosion and 40 people are injured, your liability limits should be higher than an SFR owner where you have that type of exposure. It sounds cold and calculating, but it is. Mm-hmm. So understanding what your lender requires, a lot of it comes back to what they want and need, and then what your investors are going to look at. If you're a publicly traded REIT, you're held typically at a higher standard. So it's not a one-size-fits-all, but it is worth, back to the educating, looking at each client's risk profile.
Yeah, exactly. And we just had a recent podcast discussion about fraud, and it's all about flipping that investor's mindset, right? Of this could never happen to me versus I need to prepare for the worst and it could happen to anybody. And I think it's the same with insurance.
100%.
Well, and we heard, from Richard Ross from Quinn Residences that he has more pets than children in his, so you talk about the pet, the bite, and all of those elements. So there's pieces that you truly need to make sure that you've got covered that you may have overlooked.
Yeah. True. Very true.
This has been a terrific segment. We're going to pause here and go to our What's the Word series right after this. We'll see you shortly.
RCN Capital offers flexible loan programs designed to help wholesale partners close their clients' deals faster. From fix and flip properties to long-term rentals, new construction, and multifamily investments, we provide your clients with the funding solutions they need. With competitive terms and a quick approval process, we make it easy to focus on growing your business while we handle the financing. Learn more or apply today. Click the link in our bio or email info@rcncapital.com. Let RCN Capital help take your wholesale deals to the next level.
Welcome back. We've had a terrific discussion with Alex so far. There's a lot that we're going to still cover. In this segment, we've got something called What's the Word? If you can boil down to one word or a motto, what's the message or inspiration for you throughout your career or heading into 2025?
One more step.
Is it a big step? High step?
Think about this. If you took one more step than anyone else every day, and you went a little bit extra, I'm not saying sprint, I'm not saying race, I'm saying look around and take one more step. That has been my motto.
Love that. That's really good.
It is. And it's easy to achieve.
Very easy to achieve.
Yep. That's great. So as we move on to the expansion of technology and AI, what has that done to change the landscape of real estate insurance? From your perspective, is this increase in technology and AI making your life easier, introducing a lot more challenges, or is it somewhere in the middle?
We love it. Gallagher is very, very invested in technology, AI, and I'll give you a great example of how it impacts our clients. So, as you know, there are storms, there's convective storms, there's windstorms, there's all flooding, etc. We have a platform called Forecast, and we input all of our clients' addresses within this, and we have hundreds of thousands of SFR clients, as an example, and we are able to provide real-time the information on wind speed, direction, what the expected damage could be to our clients on a very granular basis, so that when it gets pushed out to them, they can go to their teams in the field and know where to fortify, where to inspect, how to get it done faster. And this is what technology does. So we are using AI for everything from scrubbing leases to identifying where there are discrepancies, and it's fantastic. Couldn't be happier.
Oh, you talk about Tornado Alley, which we certainly saw this past week.
Right.
What are, how can you, predicting that, which you couldn't pay me enough to live there. But you look at being able to, the predictive occurrence of something I think is huge.
Yeah, it is. And our clients expect it. I think it's going to continue to differentiate the likes of Gallagher and others who are willing to make the investment. and give that data to their clients so that the clients can make better decisions. We run flood models all the time, and we have a number of clients who say, you know what, if it's in a flood zone or we're out, we don't want to buy it.
Sure. And a lot of the investors don't want pools. I mean, there's so many things that, the attractive nuisance and all that.
Exactly
So,
right.
Sure. So what factors should investors consider when looking at the insurance policies and probably most importantly with the multifamily space?
I think that, I'll go back to my thesis, people hate insurance and they want to pay the least amount possible. But insurance, like real estate, is not monolithic, and you typically get what you pay for. So if you're going to buy a very skinny down policy, you might be a little upset when you find out that if it rains and there's water that backs up in the sewers, that's now considered a flood, and the deductible is $250,000 or $500,000 if you bought a cheap insurance policy versus saying, okay, I have a legitimate exposure. So I do think that people need to be educated and not just say, send me the DocuSign and hope for the best. There has to be some engagement before you buy something.
Sure.
And, I want to make a quick comment too. In multifamily, the insurance companies on the liability side are becoming much more rigorous. They are looking at crime scores. They are trying to put habitability exclusions, sexual assault and molestation, and assault and battery. So that means if somebody is shot or assaulted on your property, you had nothing to do with it, right? Drive-by. And you get dragged into a lawsuit, make sure you don't have that exclusion. And I know that Fannie and Freddie are really coming down hard on that. So that's a much longer conversation, but understand what's in the policy.
Sure.
For sure. This has been an expansive conversation. We thank you so much. I think the last thing to do is ask you, what's next for you at Gallagher? Any big projects in 2025? Any big goals for you coming up?
Well, I think the goal is to continue to attract and retain really smart people, to show them that insurance is really not that boring. It's fantastically fascinating if you want it to be. Mm-hmm. And if you're willing to become a student of an industry, real estate, and learn all the different food groups, you can have a great career.
Yeah, beautiful. Well said. So there you have it for our audience. Alex Glickman, Global Leader of Real Estate and Hospitality for Gallagher. If you have insurance needs in this industry, go to a trusted professional, somebody who knows the business very well, as Alex proved throughout this conversation. We thank you so much for your time, Alex. For our audience, thank you for making it to the end. Like, comment, subscribe on this video. It helps us out so much. For Suzanne Andreessen, I'm Nate Zielinski. We'll see you in the next episode of Uncontested Investing.
See you soon.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.